I'm Corbett Wall with DV Auction, here with your feeder flash for Tuesday, May the 8th, where we had heavy sales of fed cattle on a negotiated basis last week, and we've got heavy offerings coming up this week, and maybe we're starting to see the first signs of that big wall of cattle coming, but it's got most all your analysts scared that we've topped the market out and we are going down the other side of a cliff, and they could be right. You look at the board for Monday, June live cattle futures down 87 cents. They're just, nobody has any confidence in this cattle market in Chicago. But June live cattle ended the day on Monday at 105.17. We're sitting at a market that topped out at 126 last week. So working on a $21 basis there, which your feedlots are not complaining, because that's the basis that's helping them make pretty darn good money on the cattle that they're selling. But the problem is they may not be able to break even on the ones they sell in 6 weeks. August live cattle down 97 cents to end the day at 104.10. August feeder cattle down 262 on Monday at 143.70. Your May spot feeder contract down 277 at 137.62. Now the weighted average come out on last week's fed cattle trade, 144,000. That's the largest negotiated trade we've had in over 5 years. Your top was 126 in the Southern Plains, both Texas and Kansas, with a weighted average on live steers at 124.81. That was up $1.08 compared to the weighted average from the previous week. Your top price at 126 was $2 higher. But in the Northern Plains, we never did really establish what a spot market live basis would be, as we just never did have any really sales at a big volume to decide what that was going to be. Probably the closest thing we had to it was 125, which doesn't make a lot of sense because your Northern Plains have been running at a premium to the Southern Plains, but that's where we saw most of your cattle for immediate delivery sell with at 125. So I guess that's the tops in Northern Plains, but that's actually your Northern Plains live sales were steady to $3 lower. But on your dress basis, again, it was just a mixed up hodgepodge of prices, mostly all depending on when the delivery was, if it was for late May or if it was close up. A lot of people getting rid of a lot of junk cattle and different things, but $2 was probably top, practical top. We did have 202 dressed to some regionals throughout the week, but especially late in the week. But your weighted average on your dress steers was 193.65, which was actually down $2.56 compared to the weighted average from the previous week. But if you look at your weighted average on your dressed heifers, it was 194.85, actually up 18 cents. So just did not get a good test. We just had so many cattle selling at different prices depending on when they were going to deliver and what the quality was and what time of the week they sold and just everything. But you know, like I said, basically in the Northern Plains, 125 for immediate delivery, and this was on Friday. And for late May, 120 was probably still available, and you could get that. It's going to be interesting to see on a lot of these arranged sales that they've got, which is part of their captive supplies. A lot of those cattle will end up trading or end up being paid on the high for the previous week. Most of those are dependent on a certain amount of volume to happen at that level. And the way things are going here is we may not see that, or guys are going to feel like they were getting screwed because we're not getting enough volume at that top price. And then they're not going to be quite as happy with their formula pricing as they were before. But let's look at a breakdown nationwide. You can kind of see this stuff broke down. I know I said we had 144,000 sell in the 5-area feeding region, which is really the ones that count. Now nationwide had 169,500 because you have some sales up there in the northeast or northwest, and you have some sales in the Pennsylvania area, and then scattered out all around the nation. But your 5 areas, your main deal. But nationwide, 169,500 head. 71% of those was for immediate delivery or within the next 2 weeks, but 29% of those was for 2 to 4 weeks out, or otherwise late May into early June. Actually 49,000 head of the cattle that sold last week are for delivery 2 to 4 weeks out. And that's about twice as many as sold for 2 to 4 week delivery as we had the previous week, whenever we first started talking about selling all these cattle out into the wall of cattle and trying to set this market up for a fall. But it'll be interesting to see what we end up doing. You know, we're not unlike last year. If you can remember last year, this thing is setting up exactly the same way. If you remember, about this time last year, we saw some big gains on your fat cattle market right before we hit the big numbers, and then had a big fall off. But the first week of May last year, we saw the top price in the Northern Plains up to $147, and that was $10 higher than the previous week. But by the time we got to the last full week of May, we had lost $15 all the way down to $132. So if you remember that, that would be probably going to be something similar to that, as everything's kind of lining up the same way. The couple of things that are different, though, as we go into that, is our slaughter is getting huge. 647,000 for last week. That's the biggest we've had in a long, long time. And then we're expecting 650 plus the next several weeks. Those will be the biggest harvest numbers that we've seen for 7 or 8 years at least. Just huge harvest chain speeds, and we didn't see them near that big last year when we saw this, so that could help a little bit. Another thing we have this year that's much better than last year is our consumer demand is outstanding. You know, it seems like everybody's a vegan, everybody's a liberal, everybody's a bleeding heart, worried about people's feelings, but there's still more of us than there are of them. And they're showing it. I tell you what, your economy's better, people are in a good mood, people are traveling around, people are going out to eat more, they're celebrating big victories in their businesses, they're taking each other out for steaks, and everybody's got a good outlook now that we've got Trump in there. And I think, you know, we may have a better chance of getting through this than we did last year. Of course, we wish we were starting at 147 instead of 126 before we head off the edge of this cliff, but we may not lose quite as much as we did last year with those couple of things to help us out. But in your feeder market, your real-time index on Beef Market Central, based on the 800-pound steer, ended the day on Monday at 136.12. That was down 94 cents compared to the end of last week. Oklahoma City, Oklahoma National Stockyards, 8,500 head there. Your feeder cattle there steady to $4 lower. Your calves steady to $3 higher. Still good demand locally in areas, pockets for some of your smaller backgrounder stockers to buy some calves kind of on the spot market now that the grass is greened up and starting to grow in areas that have been lucky enough to have some moisture. But Joplin Regional Stockyard, 6,400 head. The yearling feeder cattle there sold steady. Calves were steady to $3 lower. So there's more calves up in that part of the country, and more people already have theirs turned out. Going to have a big video on Thursday you can watch right here on dvauction.com, and should have a good offering there. I think they usually have those about 1 o'clock in the afternoon Central. So we'll check with that and watch my later week visits, and we'll make sure we're right on that. But look at a couple individual quotes. Sylvan Grove, Kansas, the little market with the big prices, up there in northern Kansas, sold 75 head of 767-pound steers on Monday at $146.50. Joplin Regional Stockyards always has a good test of commodity cattle there. Had 92 head of 857-pound steers on Monday at $137. That's your feeder flash for Tuesday.